Wall Street declines, the Dow Jones slips for the third straight day, while the S&P and the Nasdaq too fall ahead of personal consumption expenditure data due on Thursday. Asian markets trade mixed despite weak cues from Wall Street. The gift Nifty is suggesting a positive start for the Indian market. Oil prices remain largely range-bound, with Brent trading at about $83 a barrel. Bitcoin rally too continues. Prices hit $64,000 before pairing gains. The government will announce Q3 GDP in some revisions to previous year's numbers later today. The third quarter GDP is seen growing at 6.7% versus 4.5% a year ago. Nifty index changes effective the 20th of March will see Shriram Finance replace UPL in the Nifty 50. Financials, Power Finance Corp, Adani Power will also be making their entry into the Nifty Next 50 index. Reliance drives a hard bargain to clinch a mega deal in the entertainment space, strikes a deal that values Disney's India business at around $3 billion against earlier estimates of up to $15 billion, will also lead to a 70,000 crore Reliance-controlled joint venture that combines the media businesses of Viacom18 and Star India. Reliance also will invest 11,500 crore rupees in the venture. Good morning in the Mumbai News Centre. I'm Sonal Putra and you're watching Power Breakfast. Those are the top headlines. We do have a lot of cues to talk about. We'll do that in just a bit. But first up, let's take a look at the Asian markets. It was a weak handover from the Wall Street. Of course, we've seen Dow falling for the third straight day. But that is not such a big impact that we are seeing on the Asian markets as of now. Asian markets are largely mixed. We are looking at Hang Seng with gains of around 0.4%. The Taiwanese index is absolutely flat. We have Shanghai, which is also seeing gains of around 0.3%. It's the Kospi, which is coming for some profit booking there, 0.5% lower. Nikkei too, after hitting that record levels on Tuesday, yesterday saw some profit booking and that continues today as well. If we look at the gift Nifty, that one is indicating that the start for our own markets, well, that could be in the green, a 40-point uptick as far as the implied open is concerned. But do remember, it's the monthly expiry today and we did see that sharp fall from the highs yesterday. So it'll be an important trading session for our own markets. From Asia to the United States now, where Wall Street ended Wednesday's trading session lower ahead of the release of the PCE reading for January, which is the Fed's preferred gauge for inflation. The Dow Jones ended 23 points lower, the S&P was down about 8 points, while the tech-heavy Nasdaq Composite closed with losses of 87 points. US GDP for the fourth quarter was revised low to 3.2% versus the earliest estimate of 3.3%. Meanwhile, congressional leaders announced that they have reached a tentative agreement to prevent a government shutdown for now, days before an end-of-the-week deadline. Okay, let's get you some important opinion on the market setup in the US and more coming in from BofA Securities' Savita Subramanian. Listen in.
My sense is that the world is not, and investors, professional investors are not prepared for a positive growth surprise. They're prepared for almost every other tail event or tail risk. Like when in meetings I hear talk about the most dire scenarios, U.S. debt defaulting again, the civil war in the U.S. But nobody is talking about the fact that we keep revising GDP higher and earnings are still surprising. I don't think we're in this, bull market where everybody is euphoric on stocks. I think there's a couple of stocks that everybody loves, but the rest of the market is forgotten. So I would just caution investors that are bearish on valuation. That might not be the right framework to think about in this environment.
Okay, all right, that's the global market action, but how will these overnight cues impact our own markets? We have our research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Well, it's going to be all about our own markets today, Sudarshan. So tell us, what is the setup looking like today?
Morning, Sonal. Well, the cues from global markets are not as bad as we had anticipated or suggested by the move in our market. US indices have seen a minor drop up to 0.5% following the revised GDP data for December quarter coming in at 3.2% against earlier print of 3.3%. But more than equities, it's the crypto market which is hotting up. The surge in cryptos has continued with Bitcoin crossing the level of $62,000 and is now less than 9% away from the record high. Onto our market, we witnessed a week close with falls seen across the board, which led to frontier indices seeing a fall in the range of 1 to 2% and losing more than ₹6 lakh crore in market capitalization. Both Nifty and Midcap Index saw 90% of their constituents closing in the red, and the major drags for Nifty were Reliance Industries, IndusInd Bank, BPCL and ICICI Bank. One sector where the recent moves over the last few days clearly indicate weakness is PSU. On Tuesday, except BHEL, all the constituents of Nifty PSU index saw closed in the red, and the fall was more in oil and gas space where there was a fresh brokerage downgrade. But if you look at delivery data of a select PSU companies, on your screen you can see 4 PSU names with delivery value of February 28 against the average of last 1 week. What it indicates, it tells you that there are many who are likely using current dips to buy into these stocks. In institutional activities, FI sold shares of rupees 1900 crore and of almost the same amount was bought by DIIs. GIFT Nifty is indicating a flat to positive start. In major Qs was keep an eye on Reliance Industries and TV18 on Disney deal. And for NSE Regi, keep an eye on Shriram Finance, UPL and Geofin. On macro data front, we have India GDP for Q3. CNBC-TV18 poll is of 6.7% growth year on year. US core PC for January will be released. Estimate is of 2.8% year on year, and initial jobless claims estimate is of an addition of nearly 2.1 lakh.
Okay, all right. So that is all about the market setup today. Let's talk about all the stocks that will be in focus. Upasana is joining us now. Hey, Upasana.
Hey, good morning. First up is Reliance Industries. The company enters into a joint venture with Disney for a transaction value of almost 70,352 crores. Reliance Industries will invest 11,500 crores in the JV. Next up is PB Fintech. IRDAI grants composite insurance broking license to Policy Bazaar. That's the reason the stock will be in focus. Next up is Oil India. The board to consider second interim dividend for FY24 on 8th of March. Next up is ICICI Securities. SEBI has issued administrative warning to the company. That's the reason the stock will be in focus. Next up is Punjab and Sindh Bank, the company to raise 2,000 crore via QIP or any other mode is what they have said yesterday evening. Next up is Venus Pipes. The company has announced a capex of almost 175 crores for the next phase of growth, and the company is likely to foray into the fitting business. Next up is BHEL and Coal India. They have entered into a JV to set up ammonium nitride plant. And lastly, NSE announces rejig of Nifty equity indices effective from March 28th. NSE says that the Shriram Finance will be included in the Nifty 50 and UPL will be excluded from Nifty 50. That's the reason these two stocks will be in focus today.
Okay, all right. Those are all the stocks that will be on our radar. Let me go across to Nigel joining in with all the cues from the F&O space. Hey, Nigel.
Well, morning, Sonal. It's been a good series actually for the bulls, but let's see who can get on top on the final day of this series. For yesterday, the Nifty and the Nifty Bank, both of them were battling with the 20 DMA, and the Nifty, well, it managed to hold around those levels, while the Nifty Bank mildly breached that level by the time we did wind up, though it did put in a bit of a fight. What have the FIs done in this series so far? Well, the short positioning has come down by close to around a third. And we just take a look at it, just take a look at the bounce we've seen on the Nifty. Even after this recent 250-point correction that we've seen from the top, we have a 500-point rally still, that we are sitting on 600-point rally to be precise in this series. Yesterday, what happened was the bears came back in style. 22,200 call, 22,300 call, 22,100 call. All of them did see a fair bit of action. And there were signs of writing over there, an aggressive writing. So on this final day of the series, the bears believe you've had a good series, bulls, but we are going to protect our turf, and we won't let you get past this 22,250 to around 23,000 mark. Support levels, what are we looking at? The 20 and the 50 DMA, that's in the vicinity of around 21,700 to around 21,900. The Nifty Bank support levels as well should come up for you on the screen. As I mentioned in yesterday's trading session, the Nifty Bank went ahead and breached the 20 DMA. Now, if it goes a little bit lower, the next reference points that we're looking at is around the 100 DMA. For in terms of stocks that I'm looking at, Shriram Finance, I'll be tracking that stock that's been short built up for the next series, and now it's made its way into the Nifty. So that one could come in for a bit of a short covering bounce even today. Back to you.
Okay, all right, guys. Thank you so much for joining us and prepping us up for this trading day ahead. Time for a short break now. When we return, Reliance clinches mega deal in the entertainment industry with Disney. All the details on the other side of this very short break. Welcome back. You're still watching Power Breakfast on CNBC TV18. Well, the Nifty index will undergo changes effective from the 28th of March. Nigel is here to tell us in detail the stocks that are included, those that will be removed. We were speaking about it yesterday as well, Nigel, and it's final now.
Well, that's right. The suspense is over. I did not seen so much of drama ahead of index revision, but this time there was. And, Shriram Finance, everyone had positioned themselves that it's going to be coming to the Nifty. In the last couple of sessions, it's got rather, volatile. So the official announcement is out. In the Nifty, you'll have Shriram Finance that comes in and UPL will be making its way. That's on expected lines. That's what most research firms had come out with. In terms of flows, well, the inflow because of the Nifty inclusion will be around 271 million USD. That's for Shriram Finance. While the outflow for UPL will be close to around 100 million USD. Remember, Shriram Finance, this is the inflow for the Nifty. I'll tell you there'll be some outflow as well for Shriram Finance because they'll be making its way out of a couple of indices. Nuvama, they have quantified the impact that they believe. They're saying by the end of March, they believe that, since Shriram Finance is fundamentally as well placed and now it gets into the Nifty, so they expect close to 10 to 15%. This is as per them. On UPL, they're saying they don't rule out a single-digit correction on UPL, though the stock has already been a big underperformer. Moving to the Nifty, next 50 changes. Out there, you have a few stocks that have come in. Geo Financial, Power Finance, you have Adani Power, REC, as well as IRFC. All of them are coming in, and those are potential inflows as per Nuvama alternate research. So just take note of that. And the reason I said that Shriram Finance, because it's coming to the Nifty, it'll get $270 million of inflows. But because it's moving out of the next 50, that's why there'll be some outflows. So the net inflow will be close to around 200 million, 270 minus 70. And those are some of the stocks that will be moving out. So those are the big changes that have come about. Shriram Finance, that's the stock to track. Normally you see pre-positioning, but this time around, there was so much of volatility that some of those will not be prepared for this one. And it's come on expiry day. Expect a bump up on that name.
Okay, all right. Thank you so much for getting us up to speed with those changes, Nigel. Let's move on to the big story from last evening. A large media giant is in the making with Reliance Industries' deal with Disney to create an $8.5 billion company. Nisha Pudar is joining us with all the details. Nisha.
A behemoth is being created in the media and entertainment sector in the country with the coming together of two giants, Reliance Industries as well as Walt Disney Company, to form a strategic joint venture worth $8.5 billion. We are talking about the media and entertainment company going to be the largest one in India with these two coming together. In terms of the shareholding, we are talking about 46.8% stake to be held by Viacom. Reliance Industries will be owning 16.34% stake and Disney will have 36.84% stake in this particular joint venture. Remember that Reliance Industries will be the controlling partner of this joint venture and will also be infusing $1.4 billion as part of this transaction. In terms of leadership, well, Neeta Ambani will be the chairperson and Uday Shankar the vice chairperson of this company. The transaction timelines, as expected by the companies, is to complete in last quarter of CY24 or the first quarter of calendar year 25. Now, talking about what it means, a revenue of over 25,000 crore rupees of the combined entity is what we are talking about. In terms of numbers and the kind of offerings and assets that they have in their portfolio, well, television channels over 100 in number, streaming platforms, 3 of them combined together, and with an impressive international catalog is what we are talking about. But when we talk about sports, it's an end-to-end offering of sports portfolio in the country with every commendable right in the sporting event, international or Indian, is going to be really held by this large joint venture. So a huge offering coming in from this largest media and entertainment company in the making. One thing to watch out for will be the regulatory process and also the approval coming in from the Competition Commission of India, because remember, over 40% market share breach is something that CCI takes very seriously, and in television as well as in the streaming platforms, this particular combination could be breaching those particular market share limits. So this is going to be a commendable force, and all also remember, in terms of advertisements, they'll pretty much be capturing the entire market. In terms of competition, well, competitive intensity in media and entertainment space is going to be large because no single entity is going to have such a plethora of offerings.
Okay, Nisha, thank you so much for joining us with all those details. With that, we'll do one thing. We'll slip into a break. When we come back, we'll talk about all the cues from the commodities market. So stay tuned for that. Welcome back. You're watching Power Breakfast on CNBC-TV18. The government will announce the Q3 GDP data today, along with some revisions of past years. Lata Venkatesh is here with a heads up. Lata, what can we expect?
The government will announce the second advance estimate of the current year and revisions to previous years. But the most important number it will announce will be the Q3 GDP. Our poll estimates that it will come in at 6.7% over a fairly low base last year of 4.5%. But Q2 was very strong at 7.6%. This 6.7% will be comprised of agriculture, according to our poll, will come in only at 1.3%. But industry will do very well at 7.6%. And services will come in at 7.3%. That's our poll. The government also will announce revisions to previous years. And the full year estimate for the current year will also be announced. The RBI and the NSO expectations are 7.3, but our poll said that it is more likely to be 7.1. This is full year, current year. As I told you, previous years will be revised. Now, the third revision of FY21, second revision of FY22, and the first revision of FY23 will come. These are the current numbers. Now, if any of these in the revision change, then because of the base effect, you can have a change even in the current year's GDP forecast. So we will have to watch out for the revisions.
Okay, all right. Thank you, Lata, for joining us with what to expect from GDP data today. But with that, let's move on and talk about the commodity markets. Manisha Gupta is joining us with all the update. Hey, Manisha, good morning.
Morning, and thank you for that, Sonal. Well, the crude oil prices have seen some profit taking after trading at almost 83.5 yesterday. We are trading below 83 right now, and that is with the expectation that the U.S. rates could stay elevated for longer. Also, when you look at the U.S. inventories, well, they have risen for a fifth straight week, up by 4.2 million barrels in the previous week. What has seen a strong demand clearly continues to be gasoline. We are looking at gasoline stocks at 2% below 5-year average. We've seen the stocks decline for a fourth straight week as well. But the street will watch out for the January US PCE price index data today. And the markets also are watching out for the OPEC and allies meeting in the month of March. That would be in focus to understand on what the OPEC and allies plan to do with production going forward from here. But it also is a strong market when you look at the agriculture commodities. So the raw sugar prices today in Asia are trading at a 1-month highs. Strong buying in Brazil and otherwise is putting prices in support there. The cotton prices also have taken a lot of support. We are trading at 1.5-year highs onto this one as well. Many agriculture commodities actually have started Asia on a very positive note today.
Okay, all right. Thank you so much, Manisha, for joining us with all those updates. With that, we'll do one thing. We'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next with all the market action.